Bitcoin just pumped past $105,000 today using the tailwinds of some extremely bullish news that I wanted to go over with you guys today. And along the way, it pushed past a key indicator for this market that I've been talking about all week was super important for us to flip into support. And I want to go over why that could lead this market even higher. So stick by, this is going to be a good one. All right, guys, this is the bullish news that I believe has been creating the tailwind for the pump that we have today, and that's that a short-term funding bill is now expected to receive enough support to reopen the U.S. government through January 31st. We're at damn near 40 days of this government being shut down, and with that amount of time of the government being shut down, the market has felt some restriction in liquidity because the government provides a lot of liquidity for the economy due to the size of the government at this point. So once the government reopens and people can start getting paid again, small businesses can get contracts again, and money starts flowing back into the market, not only will it create confidence, but it will create liquidity that will re-energize the markets, which is super important for that to happen. And not only that, there is a bunch of other catalysts that this will also bring to the table. And one of the biggest things, in my opinion, is that legislation can start being passed through. And if you notice, Trump actually tweeted the other day that once crypto legislation gets to his desk, he will sign it into law. And one of the things that we're all waiting for, obviously the Genius Act pass, but we're also waiting for the Clarity Act to pass, which can't happen until the government opens back up. And just to go over it with you guys, the Digital Asset Market Clarity Act of 2025 will create the first comprehensive federal regulatory framework for cryptocurrencies and digital assets in the U.S., resolving years of uncertainty about whether tokens are securities or commodities. What it'll also do is split oversight between the SEC and CFTC. It'll define decentralized networks. It will fast track crypto exchanges and brokers. It will ban central bank digital currencies in certain forms, and it will protect developers and node operators. What this will essentially do is bring clarity and some security to a market that has lacked a lot of that and has had a lot of uncertainty, especially now. And when you bring that clarity back to this market, investors will come back with it, which is why it's so important for the government to open up and for this bill to be passed through. In addition to the Clarity Act, another thing that'll happen as soon as this government starts opening back up is that altcoin ETFs can start getting approved once the SEC goes back to work. And just to name a few of the ones that will get approved, you have Solana here, XRP, Litecoin, Dogecoin, Cardano, Hedera, Avalanche, Polkadot, Chainlink, and Stellar Lumens. And you can see most of these have a 95% chance of getting approved, and a few of these have a few different ETFs that can get approved. There's not just one. You can see here, Solana has 4 different ETFs that are on file. In addition to that, some of these altcoins were already approved in a basket. For example, XRP and Cardano were already approved in a grayscale basket that had Bitcoin and Ethereum with it. So the chances of these getting approved is extremely likely. And if we can get the government to open up, and we can get the Clarity Act passed, and we can get these ETFs passed, and we can get some liquidity that flows back into this market, it would be absolutely massive for altcoins going forward. But there's a few more bits of information that I want to go through with you guys while I have you here. Another key bit of information we'll get as soon as the government can start opening back up is the jobs data, the economic data that the Fed needs to make a proper decision at this next meeting in December. If you watch the meeting, Jerome Powell made it very clear that the December rate cut is not a foregone conclusion. It is not baked in, it is not guaranteed, and the markets reacted very negatively to that. But they made it very simple that if they don't have the necessary data to make the right decision, then they might just keep things where it is so they don't risk making the wrong decision. So with the government opening back up and us being able to get jobs data, inflation data, economic data, this could really push the Fed to make the decision to continue cutting rates as they plan to. They plan to make 3 rate cuts this year. And if we can get this government to open back up and get all this information out, I thoroughly believe that that is exactly what will still happen. And with these two things that I just mentioned and that would be super bullish. Along with the fact that in less than a month, on December 1st, they are ending QT, which is another huge bullish indicator on its own. And I saved what I believe is the most important bit of information for last, and that is the 50 weekly moving average. I have emphasized over and over and over again in my videos throughout this week how important it would be for us to close at the end of this week above the 50 weekly moving average. As you can see over the last couple of years, this was the point where we broke out of the bear market, where we crossed over right here, and we've gotten close here. We've made contact with it once here, twice here, and now a third time right here. And this indicator is one of the key indicators to show if we are in a bear market or not. If we get multiple closes, specifically weekly closes below this 50 weekly moving average, everybody will believe, and for good reason, that we're in a bear market, because that's exactly what happened in the past. And as you can see right here, all week we have been flirting with this line over and over again. And I said, hey, if we get a day or two candle close below it, it's not the end of the world, but it's very important that for tonight we close above that line and get a weekly close above it. So us getting this news of the government opening back up and it being enough of a tailwind for us to be pushed above this line is massive, because that will bring a lot of hope, confidence, and optimism back into the market that maybe we're not in a bear market just yet. And I guess what I want to say to end on is, one, please keep this indicator in mind and please continue to watch it, because it's as we stay near it, we're not pushed past it and in the clear yet. As we stay near it, it will continue to be, in my opinion, the most important indicator to watch as we move forward. And to second that as well, obviously, if the government opens, and the news of the government opening is very important and very big, and it's going to bring a lot of confidence back to the market, don't be surprised if the government opens back up. If we push back up, hit some level of resistance, there's been a lot of resistance around the 116K area, or maybe even down here around 110, and we just dump right back down. That would not be the end of the world. It wouldn't surprise me even a little bit. Fake outs happen all the time. So just keep in mind that anything can happen, but overall, all this seems like very good bullish news, and it could mean that we could see a continuation into this bull market going forward.